All right. So I mentioned last time, webinar one, that it was a little bit longer than I had expected. And I went like 82 slides or something. I mentioned the next one would be shorter, and I was completely wrong. I got really excited and built 102 slides. So we're probably not going to fit this all into an hour is the bad news. The good news is this will be recorded and dropped onto YouTube and will be emailed out. If you're registered for the Zoom, you'll receive an email with the deck. With that, I will go right into the slides. We will hold off all Q&A until the end. So I initially labeled this session up to speed with Claude Cowork. We're going to revise that a little bit. I'll get into the context of why, but we'll talk about a few tickers today. So just disclaimer, nothing is investment advice. And if you listen to a random guy on a webinar about stocks, there's probably more issues anyway. So yeah, don't take anything as an investment advice. Obviously, reminder of my background. I sort of come to this session, one with many priors on the applied adaptation intersection of fundamental investing. And really in the last 4 years, more of a parallel experimentation with these tools. So that's really the lens I come from, not from a technologist perspective by any means. I'm really not a technical person, but from someone who's really taken a lot of time to decompose the workflows. And sort of in my personal journey from, for 11 years I was in New York. I'm not pictured in this picture because I was likely at a hedge fund preparing for earnings season. And so I moved to Arizona 8 years ago, and I just have more time to go through and experiment with these tools. I have sympathy for those of you who are trying to manage capital while also staying up with AI. It seems like an impossible task. I don't manage capital, and it's very hard to stay up with AI. I think a lot of what you'll see here comes from my historical priors, but just the AI experimentation journey that I've been on. I've sort of been looking around for experts who can teach me all these things, and I'm like, well, there's no one, so let's try to see what we can do about being the one-eyed man in the land of the blind, and have just spent a lot of time, a lot of hours in this space. A combo of things that have worked well for me, if you're inspired on the same journey, is finding the right people on YouTube and Twitter to learn from lots of conversations, a parallel experimentation, which is sort of the heart of our pedagogical approach in AI. Let's show the manual approach and then the AI approach, some client engagements. And as I'll show you today, I'm sort of serving as guinea pig with the mindset that, hey, I'm building a portfolio to invest the same way that AI can drive you now. Can it help me ramp up a mock portfolio? I almost certainly can't do all of the elements of that process, but I'm in exploration of what elements it can do. And sort of the fun one, someone pointed out Cunningham's law, which states that the best way to get the right answer is to post the wrong answer on the internet. And so the reply guys all give me all sorts of great feedback, pushback, often accurate. So OX Falcaroy, thank you for pushing back on my tweet and pointing out something that was actually half right. I've learned a lot just by conversations in DMs and being active on Twitter. One thing that sort of the overarching concept that all builders in this space are struggling with right now is the bitter lesson, the fact that building with AI right now is sort of a deeply bitter lesson, pilled example that the concepts that we taught in our AI Academy in September, like retrieval augmented generation, really have been leapfrogged in new technologies, and sort of been hearing a lot about this concept of the bitter lesson of AI engineering, which is effectively that the scaffolding that people are building right now is just a temporary compensation for models that aren't yet smart enough and context windows that aren't yet big enough. And we've seen all sorts of examples of this in AI, whether it's vector databases and chunking or RAG or OCR or prompt engineering, mechanical tricks. And right now the hot thing is MCP. Is that next in terms of abstraction? There's a debate going on there as well too. So my sort of advice, is to the 95% of normies like me that aren't deeply technical is don't necessarily worry about setting up your Python environments and becoming master with IDEs and getting a GitHub account and all of this. My sort of belief, I'm operating on some degree of faith that the Binner lesson will continue to hold and that much of this engineering will become abstracted rapidly. And I'm seeing that today. You've seen it in vibe coding tools like Replit and Lovable, and you see it in tools like my now favorite Perplexity Computer, which is really an deeply abstractive, highly effective agent. And I'm not sponsored by Perplexity. So also, it just sort of helps me manage my existential angst to try and stay at the intersection of AI. I wake up sometimes, I'm like, am I going to be part of the permanent underclass? I better learn this AI thing. And so really starting in the fall of September 24, we started with the cutting edge webinar hosting AI vendors. We ran a 6-month guided cohort that finishes this month called AI for Investment Research with PMs and analysts. And a lot of this now, the reds cross because a lot of these things are now decayed in terms of relevance. So I'm going through the rework process right now to figure out what's decayed, what holds, and what the future looks like, which is a little bit hubristic to say, but I'm going through this deep experimentation process. A couple things to keep in mind on that. The world doesn't need another podcast, but apparently in this space it does. And so we with my friend Kehi, be rolling out a podcast, Invest with AI, soon. In June, we'll take some of these concepts we're talking about today and put that into an accelerator, sort of a guided, structured implementation plan in a cohort structure to do this. So that's a little bit of an intro, a welcome. I want to talk today, sort of the core today is to talk about how to get up to speed on a name. And I need to start with the concept that's widely discussed of the mosaic approach to investment research, which sort of speaks to the fact that insights on companies don't come out of one single step. Almost never in my investment, certainly never in my investment process, have I just read the 10K and developed a differentiated insight. An insight comes from this sort of complex, ongoing building of a mosaic about companies and about stocks. And you don't necessarily know exactly what step of the process will develop that insight, but the combination of covering companies closely sort of causes this formation of differentiated insights that you can invest with conviction. And so that's sort of I think hopefully non-controversial concept, but I think important when you start to hear questions about what AI can do for investment process. The belief is that, hey, we can go one shot this investment process and just, have AI give me a view on what to do. And almost certainly you're going to get slop out of this output. You're going to get the fact that, the LLMs on a one-shot basis are trained from the open web. You're sort of getting maybe speed to consensus, which is sort of definitionally not helpful for alpha generation. You're not going to get primary source contact. And the particular sort of risk here is it sort of sounds plausible. It sounds right. And so with no validation, this can be a very dangerous process. So sometimes I talk to friends like, hey, I tried to use AI in my investment process and it didn't work. I'm like, well, what did you do? I'm like, well, I asked ChatGPT what it thought about this company. I'm like, well, yeah, that's not an effective way to do it. Let's sort of talk about building a system around this. I'd say sort of other notable thing is that a one-shot approach is very likely to get you slop. And in our high stakes career path, that's a real bad. It's a really bad outcome. Things that could happen. Hey, you want to do AI prep for a CEO meeting, and you ask CEO about a business line that's been discontinued for 18 months. Or this is a real story I heard. Someone did an AI news scraper, and it said that Microsoft's revenue guidance was cut by 10%. If you don't validate that output and you trade on that in the pre-market, that hallucination has a direct negative effect to P&L. Or for some reason, all of the modeling workflows, the LLMs are highly obsessed with having a balance sheet balance, right? That's sort of seen as like the number one thing to do in a financial model. My 150 models, maybe only a handful do I actually model out the balance sheet. We're focused mostly on the P&L and key drivers. And so I've seen this in a few AI models where the numbers look right and the balance sheet balances, but the numbers, when you actually go to validate them, are wrong. And so AI is designed to produce plausible sounding outputs. So I'd say above all, what we're trying to do here is we're trying to optimize for rigor, trying to build a system around that. I'm sort of operating in this framework of a like for like 60 hours. I don't think the play here personally is about cutting headcount right now. It's about in 60 hours, right, finding a richer signal, right? If I'm looking at a name, if I'm looking at Danaher in the manual approach or in an augmented approach, after 60 hours, what outcome gives me a more rigorous, comprehensive understanding of the business? That's the sort of the North Star for me. And so that can include, that could be the exoskeleton mosaic, some of the old manual processes that you did, but it could also be layering in thoughtfully AI augmented processes. Why is this important? I think a lot of the fear about what AI will do to the investment process still operates under the old paradigm of markets, that markets are beat based on better information, right? You know something that others don't know, whether it's all data or the democratization of information on the internet. This has been a compressing alpha pool. Almost never have I sort of been in a situation in the last 10 years where I feel like, oh, I found one singular piece of information that is the source of my alpha in a name. Almost always is some combination of behavioral and integrated perception, right? Hey, all these SaaS stocks sell off because of Claude fears. These five that might be legitimate, but these five have some sort of element because I know the industry better. The market's freaking out. I have sort of developed this worldview by covering the space more effectively. I'm going to invest because there's a meaningful discount to intrinsic value. And so, I think, you heard it from a number of angles, but I think there's, market microstructure considerations why markets are more inefficient than ever. They sort of jump from crisis to crisis and overreact on the upside and downside. And so fundamentally, that's an alpha-rich environment for behavioral and perception alpha, not necessarily for informational. And so if the fear is, hey, I can go figure out this information in a chat bot, there's all sorts of reasons I think there's flaw in that logic. But that's really not the game we're playing. The more interesting path is if I take 60 hours in a name, right? What's my like for like? So in the past, it might take me 60 hours to really get up to speed on a name, maybe doing a little bit of primary research. But if I can find a way to accelerate these mechanical approaches, right? Take this 60 hours down to 20, right? That doesn't mean that I'm leaving the desk at 2 p.m. in the afternoon to go play tennis. It means that, hey, I've got 40 hours left that I can redeploy to optimize my rigor and comprehension in this name. So how do we redeploy that time saved? I think there's a combination of things. Some of it's just the good old-fashioned scuttlebutt primary research. There's a number of other AI augmented deep dive workflows. There's, I think, all sorts of concepts out there that people are talking about AI. One is that AI is great for breadth, but not depth. I think that's true of chatbots, not of agents. I very much disagree with that on agents. There's I think a number of working sort of emerging workflows that can really help you go much deeper, much deeper. A simple example would be learning about a product. I can spin up an AI survey, AI web scrapers, a deep research report on product. I could create much more rigorous understanding with an AI process about a company's product than I could sort of the manual way. And so I think finding ways to deploy new workflows to go deep, again, with the objective of we're enhancing rigor. I think in the past, we're going to talk about the two fundamental workflows of up to speed and in the flow today. One of the things that chatbots couldn't do is you couldn't build an automated tracker. You couldn't identify the one thing, the key thing, the key drivers, risk factors, et cetera, and track those autonomously. Now you can. So the other thing that people will say is, LLMs don't have judgment, and a stateless chatbot certainly doesn't have judgment. But I think the agentic approach is that you can wrap around the PM sort of applying the judgment. In my sort of hypothesis, can certainly raise batting average, raise slugging percentage, eliminate big losers more as well too. So I sort of feel like a crazy person lately. I hope for many of you watching this, you followed some of my stuff on Twitter over the years to sort of know that I wasn't a day one AI maximalist by any means. I've probably more cautious on these tools up until 6 weeks ago than average. But I'm trying to just move with the flow of the things I see, move with the feedback of the outputs that I see, and I'm really excited about what's possible. So I'm excited to be able to share a couple things with you today. I think the other thing I would note when you talk about using the tools is investment process is sort of definitionally heterogeneous, right? Whether you're at a long only that focus on business quality, deep focus on management, that's going to be a much different design, system design, than if you're a multi-manager that's highly focused on the earnings motion, focused on many management touch points for inflection. So the core part, as we talked about last week, is not to take everything I'm showing you as your core operating system, but to think about building your own exoskeleton, right? And that's the sort of the workflow that I'll walk you through today. With the sort of core prior that I have, having worked with many great investors, is that there is a very close correlation to comprehension, business comprehension. My prior is certainly that the best investors I've worked with, know their company's the best, right? They sort of deeply understand how decisions are made and the competitive dynamic. And so, we could one shot, a thesis in AI, but that's not going to drive deep comprehension of the company, right? We're optimizing for the closed book test, where I can sort of sit there and explain how the business makes money, the deep nuance of the business. And so the question is, how do we drive deeper comprehension in the same time window? Why does comprehension matter? I mean, you get into situations where if you have weak comprehension, you're sort of pulled by the nose of the shifting sentiment of the market, right? Hey, Morgan Stanley said this could be bad, I better sell, right? You're listening to the noise and you're being buffeted by the noise. The best investors are not buffeted by the noise. They, in fact, arbitrage the noise. They have strong comprehension. They say, okay, the market's freaking out about this thing. That's stupid. I can't believe Morgan Stanley thinks that's an issue. No shade to Morgan Stanley. This is hypothetical. Stock's off 9% on that. I'm going to buy the stock, right? And so that requires a baseline level of comprehension. Either on an oversell or, hey, there's something emerging coming down the pipe that this could be a real issue. This could be a real issue, right? And so I would say in general, AI sort of on a one-shot basis is an enemy of comprehension. And so I think being careful to build a system around this is really, really important. Probably one of the most important things that I would take as takeaways. I sort of tell the lived experience story of my middle school son that I encourage him to use more AI, only to find out that he was just sort of speed running his homework, and when test time came, things didn't go well. So we had to have another conversation and say, hey, we want to use AI as a tutor, right? It sort of checks your work, you did it yourself, gives you some extra questions, test prep, et cetera. And so this is sort of a rubric to me, or a framework to me, that matters to investing, right? We could either AI a bad process, or you can AI in a good process. And AI is really a force multiplier. It can help you be lazy. It can help you speed run something that looks close, or it can really help you develop much more rigorous work. And sort of one thing I know for sure is that we all have the same pie of time in a year. We have the same roughly 3,000 hours. And so the question is, if there's a lot of things, sort of mechanical processes in these 3,000 hours today, and I can trim down that time, do I have more time for value-added work? Investing is an incredibly competitive game of poker, and so optimizing that seems likely to me to be helpful to the investment process. I'm also starting to tie a little bit of this back to sort of the core objective we should all be focused on, which I think gets lost in the open claw AI productivity theater a bit. That the core question is how, we're spending a lot of time talking about these tools. How can we actually use these tools and these processes to drive better performance for our investors? Whether that's eliminating big losers, or finding more big winners, or better batting average, entry exit timing, better sizing. And so in some of my work, I'm going to take some of this from conceptual back down to really trying to tie this to performance. I also sort of think, it's very philosophical. The question is, are we cooked as investors? My general sort of prior belief is that there is this sort of, alpha window hypothesis. I take this from the alt data sort of experience. That all data was a sort of a nice driver of alpha for a window, and then it moved from alpha to beta. I think also institutional capital flows are pro-cyclical. So the time, whether it's 5 to 7 years, where you can adopt this in your investment process and drive better results, is that drive more capital inflow, and winners can lean into advantage and push the alpha frontier, which has sort of always been the prior in investing. Does it eventually compress as markets adapt? Possibly. I think one thing that is on the side of fundamental investors is our craft has been under pressure a bit. Capital flows into indexers, quants, and retails, non-fundamental investing sort of actually could sort of extend that window for us. So I actually think, like, the more I think about this, I think it's a wonderful time to be starting a career in fundamental investing. The tools are better, and the setup for alpha generation, because of these market microstructure considerations, are helpful. So I'll stop beating that drum, and we'll get into the real question of how AI will change fundamental investing. Before we talk about exoskeleton, let's just talk a little bit about skeleton. I think one of the things that's really helpful as you think about sort of deploying AI is to think about your research process, right? And one of the core things I want to show you today is this sort of workflow context, and how helpful, how much leverage there is in developing workflow context. What does that mean? It's just writing what you do and why you do it. And so I'll show you a few things that we use in our Analyst Academy as context. I sort of think about the investment process as two arcs. I think about it as a thesis development arc, right? Kind of the up to speed from idea to thesis, right? And then I think about as the active position management. So once the idea is in the book, what do I do then, right? How do I monitor the catalysts and earnings and management touch points and news and event navigation? This is more of a deeply Bayesian, deeply tracking focused. And I think when you think about deploying AI, these are two separate buckets in a way that have sort of different benchmarks on data accuracy for sure. Part of the reason that so much of the focus has been on the thesis development arc, or the up to speed process, as we'll call it today, is that there's a natural validation loop, right? If I'm sort of thinking about populating a portfolio of 30 ideas from 3,000, right? A lot of this process is just a winnowing down of ideas, is qualifying or disqualifying names. And so this is great. AI hallucinates, but AI also could be highly effective for the sort of winnowing process. I don't put a name in the portfolio without human level validation. But if I can turn over many more stones, I can ultimately drive a portfolio that's sort of more rigorous with sort of more compelling ideas. So I think sort of version 1.0 of our curriculum has pointed people more towards trying to drive efficiency in this idea generation or hypothesis formation, right? For those of you that were in the AI Academy in September, that's where we spent a lot of time, partly because chatbots had fundamental limitations. So, the two fundamental workflows of up to speed and in the flow, the up to speed is more of a triage function a little bit. Certainly the early steps in the triage function. The in the flow is a little bit more of a Bayesian or edge function, where if you're wrong, a hallucination is much more expensive on an in the flow function that drives a trading outcome, right? Which is also why you see a really notable delineation and adoption in AI between generalists and specialists. My friends who run small, under-resourced generalist funds have adopted AI to a degree that's much more dramatic than my friends who were at large, well-resourced specialist funds, which is sort of the flip of what you might think. But if you really think about it, it makes sense, right? A generalist is looking at 3,000 ideas. A lot of the workflow of a generalist is this triage up to speed function, right? Then you have a portfolio, you're maintaining that. The typical well-resourced institutional manager, you have analysts who've covered healthcare for 10 years. They're not reading the 10K for the first time. They know these companies intimately. A lot of the flow is active coverage, right? It's the daily blocking and tackling of news and earnings and calls and panels, et cetera. And chatbots were really not good for that, right? The bar for in the flow is much higher. Again, we sort of put all these workflows into red, green light. Not to say that a red light can't be turned green light with a good system, But in general, we've seen a lot more red lights in the flow, right? News monitoring, right? If I want to take an AI agent and have it distill my inbox in the morning, it had better be right, or there better not be hallucinations, because if I see something, I might go trade that in the pre where there's not a lot of liquidity. Whereas if I see a hallucination in a quick story or a sniff test, by the time I'm doing the full ramp, I have a validation workflow to go back and check those numbers, right? So there's a natural prevention mechanism of any errors reaching portfolio, which is not true if I'm trying to say, hey, hey, ChatGPT, here's the earnings press release. Should I buy or sell the stock at the open? Like that's not a workflow that should be adopted easily. So I think people have, even the large funds have, sort of adopted the chatbot architecture. People are sort of reworking that now for agentic architecture. But the in the flow architecture probably has more of an alpha. There's more of an alpha opportunity there for sure, versus an efficiency opportunity in the up to speed. So this is where I'm sort of like going crazy now, because it's just like, wow, like the pieces are there. It's still not perfect yet, but some of these things that were purely conceptual. So we'll be back more on the in the flow stuff. That's where we're doing having some interesting client conversations. But today we'll talk mostly about the up to speed triage consideration. And I'll start by just telling a story about Bayer, which is a European pharmaceutical company. I looked at this name 10 years ago, 8 years ago, something like that, and as a potential long. And the idea was there was an acquisition of Monsanto. I did a little bit of sketch pro forma analysis, and it was like 5 times earnings on a pro forma. I'm like, this is like pretty interesting, pretty cheap if these numbers hit and the synergies hit. And I thought, okay, put a 10 multiple on that in 18 months. It's overly hated. It's a double, right? So let me go sort of do some due diligence on this name. Well, fast forward 6 days later, right? I'd sort of uncovered a few red flags, a bigger glyphosate Roundup issue, messy regulatory gauntlet to get the deal done, and sort of a belief that it wasn't the right management team to drive it forward. So it sort of went in the too hard bucket for me. I passed. I didn't lose money. Didn't trade the stock. But the sort of negative thing is that I took 60 hours out of this 3,000 hours. Right, I could have spent that time doing something different, right? So the largest negative impact of Bayer was the 60 hours of lost non-compounding research time. And so I sort of go back to some of these experiences in my career. It's like, all right, how could I have killed this situation earlier, right? The accelerated triage concept of front-end exclusions, risk checklist, patterns of priors. If you're an analyst, hey, will my PM own this? I was a PM in that situation. How could I prevent the Bayer AG issue from recurring and design a process around that? And listen, like, you get a few of these a year is fine, but if this becomes a recurring pattern as an analyst or a PM, that you're constantly working on ideas for 2-3 days, 4 or 5 days, 2-3 weeks, and then killing them mid-process, all of a sudden your idea velocity is not what it needs to be to sustain alpha ideas in a portfolio. So this is sort of a simple workflow. It's like, how can you start? How can you start with risk? One of the things we've shown at Analyst Academy is an investment checklist that I developed over my career. And what are the disqualifiers, right? It could be cyclical demand peaks or peak margins or aggressive counting standards. Pretty easy to build a checklist and turn this into a front end screener to really give you the go or no go, right? Could I have spent 30 minutes on Bayer, seen some of these issues, and gave it a red light and saved 59 and a half hours, right? And so those are sort of just some interesting workflow concepts that I think I'm thinking through in terms of how to get the most out of new systems. The most exciting thing to me in the last few weeks is, with the evolution from chatbots to agents, what's possible in terms of the concept of a new investor dashboard, right? And so one of the very sort of challenging points of chatbots was how cumbersome they were to use. I had 306 prompts. I had to figure out when to use the right prompt in the right situation, where to store my prompts. I had to upload Ks and Qs in the ChatGPT project. You could sort of pick one specific workflow and you could see an interesting output, but that workflow certainly did not scale. And it certainly did not scale across a 100 investor investment team. Even now, what I see in most clients is of 100 investors, you have 3 or 4 people who are really down the rabbit hole into IDEs, building stuff with Cloud Code, custom dashboards, open cloud, doing crazy things. And the other 97 people are like, hey, I'm still trying to figure this out, right? And so the interesting thing to me is now with agents is building ecosystems around a new investor dashboard, right? To have, a new, I was sort of like very anti when people say like, kill the Bloomberg Launchpad. I'm like, that's probably not going to happen. The more I think about some of these workflows and see what's happened, I think there is an opportunity for a single pane of glass, a new investor dashboard, where you can sort of pick these different workflows, right? I don't have to prompt this. I don't have to build the skills. I don't have to, think about the uploading the data, right? This can be done on the back end, either through subscribing to a vendor or with, I think, increasingly easy engineering capabilities to do this in-house. All of this gets abstracted away. The analyst doesn't even see the skills architecture, has to learn prompt engineering, right? And so some of my hypothesis is that if you're an investor, don't go too far down the rabbit hole of learning all of these technical elements. That time might be better spent thinking about your data architecture and your workflow architecture rather than the engineering. I may or may not, that's a hypothesis. I may or may not be right on that. But the simple workflow of each of these individual workflows can be supported by a data architecture and a workflow architecture via skills and prompts. And all I have to do is press a button, right? I was joking with a friend today. As an analyst, your PM asks, why is the stock down 5% today? Well, I can just press a button now, right? And I can pull in positioning and factors and sentiment and macro betas and all this sort of context architecture that I support each of those flows, right? It starts to get pretty scary in terms of what's possible. I didn't think that this was something I'd be talking about in April of 2026 until I found I was able to build, update, and validate models pretty well in an agentic work platform. So I think this is the concept that I would encourage you to think about. Certainly, if any of you are from firms that are building architecture, the prior very much has been over the last 36 months. Almost everything that has been built in-house has been abstracted away, has been sort of thrown in the waste bin. And so 36 months and millions of dollars of engineering has sort of been leapfrogged by some of these agentic systems. It's probably a little bit of a overreaction, but the bitter lesson I think holds is that the scaffolding that people are building has been just temporary compensation for models. Simple things like OCR, optical character recognition, which was required to pull accurate numbers from a PDF, but now that's a solved problem or close to a solved problem with MCP. So that's my just observation, having paid close attention, and that the sort of active call and response chat dynamics will shift more towards passive research, so that I'll have more dashboards and buttons to push. That'll be a decision dashboard, a single pane of glass with all this whole context architecture supporting that. That's really important to me when you start to think about enterprise adoption sort of across teams. It's not 1 or 2 people in an IDE building dashboards that is very hard to scale across investment teams. It's a team sort of figures out a dashboard that helps them communicate. That is really a new workspace that has the research management system plugged in and factor models plugged in and everything, and it's sort of the new dashboard. It would be wonderful if Bloomberg could do that. I think Bloomberg is now getting to a point, it seems, in their tool where most of the other tools were 18 months ago. So I'm guessing they won't work fast enough to sort of build this. All right, so that's my soapbox on tools. Let's get into up to speed. So again, this is sort of a gating structure, right? If I look at an interesting idea, right, I don't want to just go start and spend 60 hours, right? I don't want to start by building a full 12-hour model. Again, I'm trying to think about a gating structure of what's the story here, just sort of a quick check. If that's compelling, let me put it on my active list and go spend 2, 3, 4 hours. We call it the sniff test in Analyst Academy, right? Those are sort of the front end qualifying or disqualifying an idea. If these are interesting, right, I'll put those on the active workflow to, hey, let me get up to speed and let me do sort of the full ramp, right? The full refresh. A refresh would be, hey, I've covered this name in the past. I know I don't need to start from scratch, but I need to get up to speed on what's happened over the last 4 years. Or a full ramp, I have no idea what this business does. I need to go spend 2, 3, 4 weeks on the idea. So each level is sort of a commitment decision. This is not AI. This is just core workflow decomposition that we teach in Analyst Academy. All right. So let me be a guinea pig. I'll sort of lay it out for you. I retired from managing money in August 2021 to do what I'm doing now. Um, and my Turing tests, and listen, I covered a highly complex space. There's always a lot going on in healthcare services names. These are names that aren't your buy and hold, long Amazon forever sort of thing. Things move rapidly. So I haven't actively traded the space just because the bar to stay up to speed is very high. So my Turing test, sort of self-assigned Turing test is, can I construct a portfolio I could pitch to a biz dev team of HR people at a multi-manager, and could I convince them that I'm prepared? So I'm not going to do that, but it's sort of my litmus test of, do I feel like I could walk into an interview and do a portfolio review from 157 names, talking about the businesses, businesses, et cetera. I do think there are some, like maybe some reemergence of quantamental things, for all the reasons of the long list of reasons quantamental strategies never really took off for the last 15 years. I think some of this maybe addresses some of that. So this is a little bit of skunk works on that. But for the most part, think of me as a guinea pig, covering 157 stocks that trade over 10 billion AUM a day in developed markets. In each of these names, I'm basically trying to figure out, I want to be able to explain the business, articulate the setup, deliver the thesis, identify the 3 key drivers, 2 key risk factors, differentiation, risk reward, right? As a DOR, if I'm interviewing a PM, I'm going through drilling down every name. Hey, you say you're long Danner, tell me, what's the business do? Why do you like it? What's happening? What work have you done, et cetera? What's the upside? And so the DOR interviewer is pushing hard on those ideas. Right now, I would completely fail that test. So that's sort of my test. So I'm getting my coverage and comp sheet fired back up, just to sort of see the different metrics. This is not AI generated. This is built in FactSet. I'm getting my portfolio back up. This is not AI generated. This is built in FactSet. Just sort of looking at what the stocks have done, et cetera. And really the measure of a sector PM to me, if you walk into any of the multi-managers to a high-performing PM, they're going to be able to look at all of these 157 names, and they're going to know them cold, right? If I say, Brett, tell me about Teleflex, like what does the business do? What's been happening? At my peak, I could tell you about all 150 names, right? 75 really well, 75 like ish. And then they sort of take that business knowledge and they're able to apply pattern sense and market sense and pattern recognition and judgment to build a portfolio out of that name. But that you don't leap to that sort of alpha element. You start with the grounding of knowing your company's cold, right? Particularly as you build a portfolio and you hire analysts and junior PMs to cover 50 names. Their job is to know those 50 names better than everyone. And once you're up to speed on those names, you should be able to look at the coverage and explain every move. This is the year-to-date move. I should be able to explain why Acadia is up, 70% year-to-date, and why Baxter's down 13%. And again, at my peak, I couldn't, but I'm trying to see how I could. I'm trying to see how close I can get with this AI augmented process. Not necessarily have a thesis on all 157, but I think in general, 30 to 45 with incredible depth, a 10 by 15 portfolio, and another 10 to 15 in the pipeline because you always need constant ideas. And then the other thing is sort of be able to understand your thematic expression chips, which stocks are an expression of various viewpoints, such that when you're looking at this, on a day, why things are moving, you could sort of explain in your mind, oh, that makes sense. These stocks are moving because they're interest rate levered. They're levered to the ACA exchange, China VBP, et cetera. And so you start to get a sense of why stocks are moving. That's important because you're trying to arbitrage incorrect moves as a high velocity PM. That's probably a little bit too much inside baseball. So I'd say I have a little bit of advantage here, because the historical context will will help me. I'm also going to do this in a small cap generalist long only at some point, but I'm starting here. I'm starting here. So can I ramp, coverage on 157 names, refresh on names I knew, full ramp? Can I update the models? I have some of these models. Many are 4 years out of date. I've always sort of had these eval set of AI tools since 2022 with things I'm like, there's no way that the tool can do this. One of them is I give my Uber model, it's 4 quarters out of date and a little messy, and I just say update this model, and it's like never worked until recently. And so, can I take my 4 year models out of date? The build from scratch is still getting there a little bit. You have to chunk it down a little bit. We'll talk about that in our April 30th. But my belief is that as intelligence improves and the MCP systems have helped a lot in terms of accuracy there, that I could be able to have a few dozen fresh builds. And then I think the real alpha is in creating the tracking systems for all 157 names. Can I sort of in partnership determine what's the number one thing for each of the ideas, the 3 key driver, 2 key risk factors, catalyst path, trading plan, thesis creep plan, data dashboard, sentiment narrative, and thematic linkage, right? And so this is really the structure. Again, sort of back to the 1090 of active coverage. Specialists haven't found a lot of use case in AI tools because chatbots were very helpful-ish to get up to speed. But I'm not really getting up to speed in this use case I am, but at my peak I'm not. Like I don't need ChatGPT to summarize a 10K on HCA when I know that company incredibly well, right? But this 90% of active coverage, having another set of eyes on all of these things, which will make or break stocks. Now we're talking, right? Now we're talking about something very helpful. As we go through this, sort of know the importance of context. Like some of these spit out, the number one thing or 3 key drivers I completely agree with. Others don't, right? Like on GE Healthcare, I said that the business has 13% of revenue was the number one thing. I'm like, no. So it does require some debugging the same way that coding agents require debugging, right? And so those are a few thoughts on that. All right, so I want to get up to speed on Danaher. I'm sort of picking Danaher in this situation because I haven't looked at it. I used to own it. I haven't looked at it in maybe 8 years or something. How can I get up to speed on the investment situation? What's the old way to do it? I sort of always been a fan of the Pomodoro method. Break it down. I have these all over my house and office. Okay, I'm going to spend 60 hours reading the relevant sections of the 10K, the last 4 earnings transcripts, conference transcripts, stack of sell side research. That's 6 to 8 hours, and I'll go update my model. And maybe I'm spending 12 hours to just kind of get the full refresh, right? So I sort of feel like I know the name, I know the story, I know what management's been saying, and that's a big task across 150 names, right? It's not that hard across Danaher. But there's 90 names I need to do that on, right? There's 60 names in this 157 that are like brand new to me. Like I don't remember seeing that name. I never looked at GE Healthcare because it was a spin. And so, okay, that's interesting. I should go take a look at it. I need to do the full 40 hours. I need to go update my models for 6 hours and build some new models. You start to add this up. And if you compare that to the 3,000 hours we have in a year, right, that requires 4,740 hours to really get up to speed and know my names well, right? I have a day job running Fundamental Edge. So my question is, can I pass this Turing test in an AI ramped, right? So can I turn this refresh into 15 minutes? Can I turn the full ramp into 45 minutes, the model updates and the new model builds? And all of a sudden, can I spend 120 hours, right? And I'm really up to speed, right? Now that's like no institutional investor is going to stop at that point. But what I would say is like you're freeing up a lot. If these can hit an accuracy hurdle, which I think is still a hypothesis, you freed up an immense amount of time for other ideas to apply from a research perspective. And to be very clear, like this is an experiment. Part of the guinea pig nature is, hey, I couldn't get this to work and it kept spitting out this error. So that when firms are doing this, I'd be like, I had this issue, maybe you'll have this issue as well too. So I'm sure they'll have many issues and problems. I'm not saying that you can one shot this. So these are sort of the various up to speed up to speed workflows. Sort of things I do, things I might do if I'm just looking for the 15-minute download, like, hey, Google a couple sell side notes, skim the last call. That's sort of okay. I know what's happening. All right. So one of the things I like to do in all of these workflows is I like to parallel process, um, where I want to start with Claude just natively, like going without uploading anything, no skills files, etc., and say, help me ramp coverage on Danaher, right? And I have many friends who are really advanced in this stuff, and I have many friends who are also like, hey, I tried to get Claude. Everyone's saying Claude's great, and I tried to use it to ramp coverage on Danaher, and it just wasn't good. And often what they will do is they will go into Claude and they'll say, help me ramp coverage on Danaher. And what you see is like better than ChatGPT was 9 months ago, but you get something that's like sounds like a investment blog. It's a breakdown of the three segments, highlight of the Massimo deal. It catches a couple things, but it really doesn't have any of the sort of structure of anything that I would find useful reading as a PM, and it's just not even close to comprehensive enough. I'm basically trying to one shot for 12 hours of research here, right? And so this doesn't get me anywhere close to passing the closed book test of can I explain and articulate what's happening with Danaher. So as we talked about in the first session, what's really important today, and maybe this gets abstracted as well, right? But as we sit here in April 2026, what's really important is a systems approach. One is sort of like having the intuition to know, the superpowers and jagged edges, even simple things like, training cutoff. If you're asking for certain things and it gives you 24 instead of 25, well, it's because the training corpus cutoff, et cetera. So having a little bit of the intuition of the superpowers and jagged edges of AI. It's the tool selection, data strategy, the workflows, prompts, and skills. It's customized to your process. What's incredibly important, I'll put a star behind this, is a two-tier validation system. So one of the biggest inhibitors to institutional adoption of AI is, one, the big firms aren't adopting because it's in the flow workflow, which is much more sort of high stakes, subject to hallucinations. And the AI tools really didn't have a great validation system. You couldn't build an AI agent to validate an output. So chatbots couldn't check outputs. Agents can check agents in a much more effective way too. So this is a really big deal to me, this two-tier validation system, the systematic agentic validation, but also the analog validation. Hey, take this thesis, identify the 6 most important inputs, either give me citation or create a checklist so I can go and check by hand. Let me go into the 10K, let me go into this meeting notes, let me verify, right? So creating a culture and system around validation. We can't afford to have hallucinations in our high stakes work. So that's important. And then using the system to enhance comprehension and rigor. So one shot, obviously, like it's one shot interactions with LLMs will not get you institutional grade outputs. One of the elements that's getting a lot of conversation and has been really, really important in my work is what's called a skills file. So a skills file is just a way to encode a process, sort of like a stack of prompts. I won't go deep into what a skill is. I would encourage you to just watch this 23-minute from Shaw on YouTube, which did a great job of just the basics. It's basically a stack of prompts. It's sort of becoming the new standard for encoding a work process. It tells the agent what to do effectively and gives the agent the proper context of your process, and how you want to get things to be done. This handles a lot of the issues so far, what I've seen, in terms of that prompts had, right? Operating with a concept called progressive disclosure with a little bit of metadata. You couldn't drop in a 30-page prompt into a system because the chatbot would lose attention at various points along the prompt. And so it's sort of, very intelligent engineering, which is becoming the standard of encoding workflows. So I'm like, oh, crap. I spent all this time in 2025 writing all these prompts, then using AI to write all these prompts. I'm going to have to start from scratch. And so these prompt libraries, that I've built and that we've built that were one, like very cumbersome because you had to there I could never figure out a right system of like when to pull the right prompt. You couldn't overload ChatGPT projects with all of these prompts because it wouldn't know when to pull the right prompt for the right situation. This is kind of a solved or like close to solve problem now. Um, and one of the things that I was frustrated by is like, I'm going to have to go through this whole process again of building skills until I realize that you can use the same sort of process of meta skills creation, right? So if you have prompts, I would encourage you to play with taking that prompt. This is a quick story prompt that I've used, and Claude couldn't do it. I'll sort of get into why I had issues with this Claude Perplexity Computer. One of the things I've liked about it is it's very good at meta skills creation. What is meta skills creation? Using an agent to create agent skills, right? Providing the context, in this case, the prompt, and saying, hey, I have a prompt on how to just get a quick story, like a 15-minute take on this idea. Can we turn this into a skill? Right? That takes about 2 minutes in Perplexity Computer, no engineering required, no coding required. So these agentic work platforms, Perplexity Computer in particular, can turn prompts into skills very, very, very easily. So I sort of have mixed, my personal take on Claude has been mixed. There's obviously a massive amount of hype. The agentic tools have been great. A number of wonderful positives. I think the agentic abilities, the fact that chatbots have hands now are genuinely a game changer. You can see the pieces that are there, and there's obviously a ton of talent and capital to continue to improve these. Claude has been iterating at an incredibly rapid pace, which is exciting. Also, I think there's a lot of bugs certainly in Claude Cowork, that have become quite frustrating to me. The frontier seems to be, Claude Code, you sort of directly in terminal or in an IDE, like a cursor or VS Code. I went down that path, was highly frustrated by that path. And I started asking around and tweeting. It's like, oh yeah, that took me 3 months to learn. It took me 100 hours to learn, like to become a power user and debug and how to spawn subagents and all these things. I'm like, man, I'd much rather just stay in my wheelhouse, operate under the sort of bitter lesson that this will get abstracted. And I'm starting to see that a little bit, and sort of most notably in you see it a little bit in things like Replit and Lovable, which are more vibe coding, abstractive tools. But you see that, I think, particularly in Perplexity Computer. So I think my observation is the tooling is still very immature. Um, um, this sort of idea is like, just ask Claude. It's so easy. Like, no, it's not. My wife was like, who are you yelling at? I'm like, I'm yelling at Claude Code and VS Code because I'm asking Claude how to use Claude and it's not working and everyone lied to me. So if you're struggling with, again, this is like a skill issue. This is a user problem. And the 3 investors who are at your firm who are really technical aren't having this issues. It seems seamless to them. But the 97 others who are not technical and whose eyes glaze over when they look at the raw code, like me, may struggle with if you roll out VS Code across. I think there's still some issues with inconsistent retrieval. The MCPs are buggy. This one is like approval loops. You got to approve everything or just let it run loose on your system. Like, we have to find a better way for that. The local system control makes me a little bit uneasy. The reality is, learning these tools is a productivity sink. The same way that learning to write prompts from hand for 50 hours was a productivity sink for me in 2025 because I haven't written a prompt by hand in 9 months. So that's a hypothesis. Before you go down, and spend the 100 hours to learn VS Code, to code up your custom dashboards, maybe just consider that. I've backed off of that. People think I'm dumb. Like, no, you do it. But like, I backed off it. That's my opinion, and I can always pick it back up if I think it's important. I also talk to a lot of people like, I'm building these crazy things in Claude Code. I'm like, what are you building? You're running OpenClaw? Oh, crazy. Let me know what you're doing. It's like, oh, you just built like a custom primer? Like, I can do that in 2 minutes in Perplexity Computer, which is basically like a user-friendly OpenClaw. Like, oh, okay. Oh, you're doing weekly web scraping? Like, yes, I'm doing that too. And it took me 3 minutes. And so I think be careful of productivity theater. Especially if you're on Twitter, be careful of feeling like you're dumb if you don't, open up an IDE and start coding things. I'm not saying people are lying to you, but there's an incentive now to push some of these things. So the one thing I backed off Claude Cowork for this specific exercise is just not there yet in Claude. The ability to sort of take prompts and have them build skills. It would build skills that Claude couldn't use. They were too long or errors or messy. So I think Claude Coworks, I think, still conceptually very interesting, still quite buggy. One of the engineers driving Claude Cowork sort of showed this thing of a piece of hardware to approve everything in Claude Cowork. That sort of tells you, tells you the system design is not there yet, right? If I have to sit and monitor Claude Cowork and approve every single thing, that's a problem versus an agentic work platform like Perplexity Pro, where I just have it do something. It's not operating in my local system. It's operating in the cloud virtual sandbox. So I don't have that process. And I don't, these sort of things like, you spend 30 minutes on something and then you reach a tool use term limit. It's like, why, okay. So, I'm not a hater of Claude. I think it's wonderful in certain ways, but I also think the hype is probably a little bit too hyped. Which sort of brings me to Perplexity Computer. I don't think Perplexity did themselves, built too many fans in finance by saying that Perplexity Search could kill Bloomberg. Bloomberg is sort of a weird, like the other side of the spectrum. There'd probably been a little bit more caution on Perplexity because the version 1.0 wasn't very good for finance. So when I tell people like you're going to be like shocked, but I'm actually using Perplexity Computer to build this. Perplexity Computer is an agent. It's basically like OpenClaw with a really nice, seamless user interface. The biggest reason I adopted this for this workflow, shifted from Cowork to Perplexity Computer, is the meta skills creation. I can drop in prompts and I can create these skills. And then all I need to do is just run the prompt on a ticker. So I don't know why it's better. It uses 19 different models. Again, I have no economic affiliation with it at all. If there's a better tool that comes out tomorrow, I'm going to pivot to the best tool. But it can create in this ramp process a skill, right? Which I can share. I won't share in this instance, but we're considering how to share those. And it sort of walks through, the full file folder. Again, bitter lesson. I was like, do I need to go learn about skills and spend 6 hours figuring out how to build the skill MD file and the references and all the .md files and start doing that by hand? And the answer is no, right? I can drop a prompt, drop some context into Perplexity Computer. I have this skills files created for me. Now that's just a starting point. These things need a lot of iteration, but it has the full sort of, produces a 25 to 30 page custom business primer. I also know like the rapidity of change, new models, new engineering. Someone said like, how do you know this won't be abstracted from Mythos or ChatGPT 6? And like, you don't know. That's just like the nature of building an AI right now. But my hypothesis, I think the observation now, I'm sort of with basically anything Andre Karpathy says, I sort of have a bias to believe. Every time he tweets something, I'm like, how could I apply that to investing? That's sort of been his sort of the knowledge graph concept right now, which we'll get into. But my hypothesis for non-developers is the time you're spending now learning an IDE in a terminal is wasted motion. That whether it's Mythos or Claude Manage Agents or GPT-6, Sam is sort of talking about a unified backend, just an easier to use interface, is really the future. So in building your skill, sort of building your platform, certainly. If any sort of engineers on the call, I would just say like build carefully, because my primary interest is in hacking and pressing you by all the things I can build with Claude Code, but I want to build systems that I think can change investment process at firms that have many investors at various degrees of investment process. And like me, I'm guessing many of them look at code and their brain is fried. We have a cognitive pie, which is consumed by following companies and markets. And it's very hard to slice a 100-hour slice out of that cognitive pie. And probably, maybe not certain, but probably a waste of time if the bidder lesson holds and the context and intelligence is, it's all about context next to intelligence and the engineering gets subtracted. So I'm sort of paying close attention to all these AWPs. which is basically a platform where Claude Code is sort of abstracted, or coding agents are abstracted. Copilot Cowork would be one of those. Perplexity Computer. Manus, I think maybe is a dark horse in this. What OpenAI builds to sort of compete with Claude Cowork. And I think, a number of people building internal sort of multi-model agents. So this is I think an interesting frontier. And ultimately, I think the standard is for builders, like, can you build something like this that a team works on the back end, like your engineering AI team work on the back end to set the architecture and skills up? But then can we go and roll this out to an investment team? And can they, as it is just so intuitive, user friendly, that it transforms their investment process really sort of right away? So that's my hypothesis. That's why I'm so excited, because I kind of see that this is potentially possible. Right. So we'll pick one of those workflows now, and I'll give you an example of how to do that. So quick story. I showed you the prompt to skills. I now have a skill set up in Quick Story. All I need to say is, as I'm looking at my dashboard of an idea, is like, a few outliers. I want to see what's happening in these 6 names, right? Just give me a Quick Story skill on these 6 names. I want to qualify or disqualify, qualify these. This takes a couple minutes in Perplexity Computer. I get a little report, and I can just sort of flip through this report. So I see, okay, why Acadia is up 60% this year. It was sort of seemed to be like a liquidity overhang, where they had capex cut, sort of a reliquidation event. Seems like maybe activist is in there to cut capex. Free cash flows back. Short interest was high, so it's sort of a confluence of maybe a squeeze, I don't know, or some sort of big moves. All right, that's sort of interesting. Maybe it's a fade. Maybe there's got more. Maybe the activists have a real sort of path here for. So I don't know the answer, but let's add that to the active. Let's add that to the active research pipeline. Then I see Inhabit. I don't know what this business does. It wasn't around when I covered healthcare. Like, okay, it's up a lot because there's a takeout. All right, okay, Kinderhook take private. All right, let's cut that from the monitor. So I could sort of go through these. What's happening at Brookdale? I used to cover that fairly closely. All right, what's happening now? Okay, the boomer demand story is now starting to, which everyone invested behind in 2012, is now sort of coming. Sustained occupancy gains into high 80s. There was a big excess supply for a lot of years in that space. Maybe that's been cleaned up a little bit. Maybe you have a favorable occupancy here for a few years. All right, that's an interesting hunch, like not a thesis, but let's put that. I see this Perspective Therapeutics got into my screen, and I see like, okay, we're starting to get into like too much sciencey stuff for me. I'm more of a hospital analyst. All right, let's cut that. I don't want to cover that. That's just too much science. So I'm sort of going through the step 1 of just the basic 100 through 157 names, just a little bit of a quick story, right? And then from there, I'm just activating those names into my pipeline. This is not a crazy, like, controversial workflow. Like in the past, how would I do this? I'd look at DES on Bloomberg and maybe EEG and read a couple notes. And it's not a huge, like, transformational. But the thing is, I can customize this to what I want, like the bull and bear and the one factor, and I want to know, like, specifically why the stock is up. It's hard to look at a Bloomberg Launchpad of talk up 42% year to date and get a very quickly distilled essence of, like, why is the stock up 42% year to date? Well, they had a blowout Q4, 29% revenue growth, adjusted EBITDA doubled, strong guidance. Like, okay, cool. Like that saved me 15 minutes of hunting down those questions, which doesn't seem like a lot. But if I'm trying to do this 157 times, that is really helpful. And this starts to help me sort of uncover the curve of what's happening in all of these, all of these stories, right? Which brings me to Danaher. So I sort of see in the quick story, Danaher, the one factor is a bioprocessing recovery trajectory. And I have priors on this because I covered Danaher for a long time, and I walked through, sort of lived through the business transformation and management strategy to align themselves with this secular growing area, and then sort of the COVID, boom in bioprocessing, and then the bust. And, we sort of get into idea generation, but one of the powerful elements in idea generation is pattern recognition. So one of my favorite patterns in longs is a hangover dissipation where there's a temporary tailwind, boom turns to bust, bust sustains for a while. Markets are not great discounting mechanisms. They sort of assume whatever is in front of our face now persists forever. But when you're hungover, a hangover doesn't last forever. There's sort of a natural cooling off of a hangover. And often that reacceleration can sort of get you back to, you sort of get the Lollapalooza of, accelerating fundamentals with re-expansion and multiples. That sort of feels like maybe that's a situation here, that extended period of weak business momentum. So all right, let's put that into the active research pipeline. And for this, again, not a recommendation to buy or sell Danaher, but let's see if we can go deep from this quick story signal. Let's see if we can go deep on a name. So how do we do that? And here I'll bring in sort of the Andrej Karpathy concept on knowledge bases. And basically what he's saying is he's spending a lot less time manipulating code and more time manipulating knowledge. And again, my principle of AI is like, whatever Andre says, at least go investigate it, right? So I think he's very unbiased and sort of calls a spade, which is certainly not true of many of the other characters in this space. He said agents were slop in October. Playing with the ChatGPT agents in October, you could see it slop. He sort of called the turn in coding agents, et cetera. So I think he's a reliable Sherpa, as reliable as they come, of the frontier of what's possible. His automated research concept, I think, is really, really important when it comes to automating research on key drivers. Essentially, what he's saying is that LLM intelligence advances such a degree there's an intelligence overhang, right? That the engineerings get abstracted, that the core part of what we need to do is just put as much context next to the intelligence of the LLM as possible, right? And so that's sort of the concept. And so I've been playing with that concept. And there's sort of two elements of context for me that matter. One is just the classic way we think about research context for investors, just the raw information, filings, transcripts, sell-side notes, expert network transcripts, et cetera. I've sort of pointed to AlphaSense as, over the last 12 years, as a signal. I don't have this great systems. I don't have a sell-side pipe, et cetera. I'm operating at a very low research budget internally. But AlphaSense to me has been a check that research context is a key point of leverage, right? That when you feed in more information, you get much better outputs. I can spin up certain workflows that I think, I'm grading my own homework, are much better than what AlphaSense does now. But something like earnings previews, AlphaSense to me is much better. Certainly when there's a number of expert network calls done on a name, because it can pull in that context and give you a much better articulation of bull and bear than you could on an open web scrape. So to me, like, AlphaSense has shown the light on the power of research context. And my sort of parallel processing of like one shot this versus building a workflow system has shown me the leverage of workflow context, right? What to do, how to do it in incredible detail, right? And my brain just is wired for some reason to just like be able to build 80-page documents on how people do earnings season. That's just like a hobby of mine. I don't know. I need to talk to a therapist about it. But I like the systems thing, like the systems decomposition of investment process is always just like nerded out on it ever since I started and doing this job. So how I build deep workflow context, a lot of it's just the 15 years of notes and process learnings that I've sort of collected along the way and distilled into our programs. We run many, Analyst Academy, enterprise programs, AI programs, Factor Academy programs, et cetera. Sort of supplementing that with brain dumps. I find myself walking around my backyard without shoes on, just speaking into into notes apps on Whisperflow, just for sometimes hours on end, talking through all the things that investors think about in earnings season to add more context. And that sort of creates a version 1.0 of a context document that are really, really detailed. Like my earnings season, context is about 80 pages of like single space, like Word document. AI is very good at creating those. You just need to drop it in and be like, hey, create a detailed context architecture. and sort of tell it, we want to do this to be incredibly comprehensive, to then flow it back into a context architecture. I'm probably giving you too much alpha of like the core IP of what I'm building, but yeah, that is what it is. So you want to talk about why to do it, how to do it, what documents you need, and a process checklist. This is not going to be perfect, so a lot of it's like iteration afterwards. Really, what you want to do is you want to get as decomposed as possible, right? You don't want to say, "Hey, I want to help me in earnings season." That sort of vague a prompt is going to get you a really bad output. Why is that? The fundamental training corpus, the parametric memory of LLMs, is primarily influenced by the open web, blogs, and Buffett, right? And so Buffett, last time I checked, Buffett hasn't never gone to an annual meeting and walked through his 16-step earnings preparation process, right? But we do that in Analyst Academy. We break it down and process into the component parts to get as specific as possible, right? These thinly sliced workflows will help you sort of steer the system on what to do, right? Hey, when you're doing an earnings preview, step one, go in and pull management baseline tone from last call, the last 3 calls, any internal notes in between. Is there language selection deviations that matter? Those can be information laden. If companies was using one specific highly positive valence word for 6 weeks, and then they took that word out of their commentary in the last 3 weeks, that might be a tell on the business momentum that they and only they see, right? What's the body language, right? Like we're obsessed with, whoa, the body language was good. You can turn that body language into a subcomponent of the agent. Now, you still have to be in the room to take the notes to do that, right? So that's sort of an argument for another day. Setup agents. How can we pull in sort of all I don't want to go down this rabbit hole, but I think systematize setup agents. So the depth and complexity of earnings season is something that you really need to build a system around that. And this is where I'm like just geeking out like crazy. You have to figure out how to steer the model. What does business quality mean to you? Business quality can mean different things to different people. It could mean, to an LLM, it means high ROIC today. Well, guess what company doesn't have a high ROIC today? Amazon, right? And so the complexity and nuance of how you think about business quality needs to be articulated, needs to be sort of steered. What are the patterns that work for you, right? Starting to articulate patterns. In our idea generation, long before AI became a thing, we talked about pattern recognition, short alpha buckets. What are the sort of types of ideas you're hunting for that aren't necessarily purely quantitative ideas? They're qualitative considerations that we had to pattern match through the crucible of just doing the work. Now you can turn those into sort of patterns, right? So those are sort of concepts that feed into this context, which I think after it's all said and done will be thousands and thousands of pages like this that capture the full context of the way I see the fundamental investment process. To give you just one snip of that, this is what comes out when I do that on a comprehensive ramp, which is just I want to do a business initiation on a company. It's a 40-hour guidebook. If I'm going to go from Dana from start to beginning, this is the work I want to do, right? This would be actually like a pretty helpful thing if you have an intern, just hand this guidebook over to an intern, sort of a guided. But I think the mindset holds in the sense of like if you had a neophyte investor and you want to give them an incredibly detailed articulation of how to spend your time and what to do, this is the playbook. This isn't Danaher specific. This is a meta context that I sort of will then turn into skills that it gives the time allocation and structure, right? Step one, I wanted to talk about like how the business makes money, which is a seemingly innocuous question, but it's like that matters a lot. Like, if I'm a PM listening to an analyst pitch, it's like a common question, like walk me through how the business makes money. You'd be surprised at how many analysts can articulate that very clearly, right? It's a little bit more complicated than you would think. Is this a good or a bad business? Well, that's a little bit more of a complicated question than it might seem. How does a dollar of cash flow through the business, right? How does a company raise capital, generate revenue to cash, right? Fund working capital, fund CapEx, et cetera. Like walk me through the dollar life cycle. These are like interview questions that I had asked people that are like actually kind of hard and good check. So I can take that context and say, hey, like for each one of these instances, go like answer this, like go walk me through the unit economics and incremental margins and all these the buy side jargon that people will talk about. Do the business history for me, like give like a big rundown. One of the crazier unlocks, again, why I'm a Perplexity computer fan now, is I can just upload that 38-page document into Perplexity Computer. I say, build me a skills architecture, right? And there's a number of different skills. You can do a singular skill, you can do orchestrated pipelines, which is a little bit of a context engineering concept. I won't get deep into that. Again, like, context windows have expanded and skills help manage those context windows, but there are still context window limitations, right? So there's still a little bit of engineering or system design skills that need to be considered. The cool part is like you can do the same way I can build and improve a prompt. I can build and improve a skill. So if I get an output, right? OX Fuckeroy mentioned on my skill is that, hey, there's a goodwill impairment coming from Aldevron. Like that's not a real risk. I'm like completely agree. Like no one really cares about a goodwill impairment. It's an accounting artifice. And so I can go back into this skill and be like, hey, you mentioned in this output that, accounting goodwill impairment is a risk to the stock. And I disagree with that because that's sort of sniffed out by the market. The market already knows they overpaid for the deal. That's not likely to be a catalyst at all. And so I could go back and taper and iterate that skill. What's interesting to me too is that part of the reason I'm building out this skills architecture is the way I think about the world is not the way you're going to think about the world. So what we're thinking about and having initial conversation with clients is like, here's our skills architecture. What do you like about this? What is different? Oh, you think about this differently. Okay, like we can taper and adjust that. Data and MCP is still very critical. It's become a lot easier with all the integrations and MCPs, and I'll talk about this more in modeling, where I think that's sort of been the key unlock, the ability to. In the past, Excel agents haven't worked because they want to go web scrape a number. So if you said in the past, hey, what is NVIDIA's last 10 years of EPS? It would go web scrape those from Seeking Alpha and like, yeah, no, big surprise that those numbers are incorrect. But getting a Delupa MCP connected in or a FinChat MCP connected in, has opened up a lot of these quantitative use cases. LLMs are bad at math and fuzzy with numbers, but agentic systems that can pull in high quality data via MCP matters. And so grounding, I think, is still an important critical element. And if you're sort of in the wait for agentic work systems like I am, I think one good thing to do at your firm is just like be really clear on data strategy. But this is particularly critical if you want to turn these red lights into green lights in the flow, where it's earnings or news. Like news is much harder than you would think to get high quality news, validated citation, getting Bloomberg news in, Reuters news in, Street Account news in. If anyone has any ideas on how to do that, I have not, from my perch, have not figured out how to do that. Scraping your Outlook, scraping Slack, et cetera. So these are systems that are just harder because there's no natural validation path. So that's sort of like advice I would give you is like, don't run into something that requires a validation path, because this is not AGI. There's still sort of these, system issues, right? But this, again, like this comprehensive path, like there will be a validation here, right? And so what do I get out of this? I get, a 28-page, custom initiation on Danaher. And this we probably will share, just to give an example of an output that, speaks my language, right? And my language, again, might not be your language. We use a focus 5 on sort of learning a business of organic growth, margin trajectory, capital intensity, cap deploy, and terminal value, durability. So it speaks my language of the lens that I would use to evaluate a business, right? That's pretty helpful. It speaks my language when I want to know, like step 1, I want to know how the business makes money, right? Is this a good business? How cash flows through the business? I want to know the incrementals, like what the company said about, incrementals. I want to know the go-to-market strategy. I want to know the unit economics. These are all things that I want to know. And now I can effectively train this system to go do the work in the way that I want to know, right? And certain things like, Gene Expert instrument price is 9,000 to 75,000. It was like, I don't know, is that if I'm going to hang my hat on that as a investable data point, I want to go and check that. I want to see a source. I want to see a source for that. None of this I'm taking with gospel. I'm taking this with the same degree of skepticism as a sell side research report. I love Jeffries. I'm not going to read a Jeffries report and go trade a stock. I'm not going to read this and go trade a stock either, right? I'm verifying and validating. But this is a speed up. Even simple things I really like a jargon glossary. If you're a healthcare investor, the jargon is your jargon is crazy. I see VBP coming up. Like, what is VBP? Okay, value-based procurement in China. There's 70 to 90% price reductions. This is where I can bring in a deep research report if I want to learn about Chinese VBP. I can get really smart on this output. This sort of element of the use case was going across a few healthcare companies right now. And so it just sort of speeds. It seems silly. It's like, okay, no one's job is going to be lost from having a jargon glossary in all of our initiations. But in the sort of the speed up effort to get smart on 157 names, that's pretty helpful, right? That's pretty helpful. It gives me the history of the various inflection points or the eras. AI is really good at this, sort of telling the history, the competitive environment. Gives me the track record. I always like these. Like, this has been really helpful for guidance track records and investor day track records. I want to know like what the company said at the 22 investor day. What were their targets, right? And did they miss those targets, right? That's a sort of important element in understanding management credibility in the external environment. How much of that was operations versus external environment? I can do a mode assessment, and these are like, this is based on the specific curriculum we teach, right? Is this a critical business? Would anyone cry if this business went away? Well, yes, because Cytiva is spec'd into, 90% of global monoclonal antibody manufacturing. That's a pretty powerful moat, because swapping a resume campaign requires months of revalidation and FDA submissions. That's really helpful when I start to think about the pricing power that could be sort of possible in this business, right? The mode durability, et cetera, guidance scorecard, capital deployment track record. Again, like, there's no alpha in this, but this is getting me up to speed 157 times. These are the things I'm writing notes on as I'm going through the K's, Q's, transcript, sell side research, right? I'd say, accounting red flags, and there's, I think, a whole rabbit hole of forensic and risk that's really, really compelling. From the start, LLMs have been quite good with forensic and risk. And if we tie this back to how does AI drive alpha, I think a decent way that AI drives alpha is by avoiding and mitigating big losers, trading plans, thesis creep, forensic, red flags, et cetera. If you've sort of run a portfolio, at the end of the year, you always have 2 or 3 ideas. You're like, well, how was I so stupid? How did I miss that? Compound mistakes. If I can use these systems to mitigate or avoid those 2 or 3 bad ideas, that's sort of the simple math of creating more alpha in your portfolio. So I think that's a really interesting, and augmented short selling, I think, is a really interesting concept right now. One thing that's like really meta, but like AI is really good at, is this human orchestration. So based on this workflow, right? Part of the thing is like, okay, what do you not see, and what do you need human intelligence to go, fine? My prior is like anything you could do at a like just desktop, K's, Q's, models, et cetera, alone is not durable. Like, every once in a while you get those, the market really overreacts, and it's just like first order desktop. But building a portfolio, a 15 by 20 portfolio of ideas with high idea velocity, really will require close to source primary research on top of the desktop primary research. This is really interesting because AI is a really good orchestrator of what humans can do, right? It can give me an example of things to go do. Hey, go, the Massimo acquisition, like, go talk to some executives, go talk to 5 CDMO customers, go, like, there's been issues with NIH appropriations. So when is the budget out? What's the catalyst path there? Let me sort of, do an agentic analysis of the last budget. And so I can sort of react quickly to when the new budget's out. How can I get smart on VBP and what's the catalyst? Do I want to buy the stock ahead of a 90% VBB cut, and one of the tools, et cetera. Again, like as a PM knowing this name, like, that's a good idea. That's a bad idea. I'll do these things. As a PM managing 6 analysts, this could be transformational, right? The ability to steer good primary research across an investment organization, I think is really, really interesting. A lot of what the great funds have done over the last 10 years in investment processes mandated certain steps in the process to raise the quality floor. I think these as like a director of research seat, the ability to bring some of this to like further raise the floor of quality on research and rigor of research is really interesting. And this is like right in front of your face, like exactly what you could do across the portfolio. I think risk systems will change dramatically because if I have a 300 stock portfolio as head of risk, I can look at the catalyst path. I can have an agentic overlay on catalyst paths. Hey, did you know that we have a huge position in Danaher ahead of the NIH appropriations report coming out next week? Oh, no, I didn't know that, Mr. Head of Risks. Like, I'll take a look at that and consider my sizing. So just the level of rigor that you can apply with some of these tools now is, again, you're not hanging your hat. It's not telling you what to do. It's not telling you if Danaher is a long or a short, right? Because again, short-circuiting that mosaic is just a really bad idea. Like, please don't do that. That's a very bad idea. Again, like some issues, like it noted, goodwill impairment, right? Oh no, there's an Aldevron goodwill impairment. Like I can't buy the stock. Like no one would. That's just like silly. But again, like okay, tangible book value is effectively negative. That okay, like I don't, no one cares. No owners or buyer of the stocks or care. So I go back in and be like, hey, you pointed this issue out. Fix this in your skills architecture. Like don't make that same mistake. And you want still, you want to train this thing the same way you're training an intern or analyst, right? What I've always had investors, my analysts do is I ramp them up is create like a 2-page completion brief for me. So it's like what I would do in the past is, hey, junior analysts, go do initiation on Danaher, spend a week on Danaher. At the end, write a report for me. I want a 2-page report. These are the things I want you to sort of explain to me. How, the business model, quality, momentum, if things getting better or worse, secular, cyclical drivers. What are the three key drivers, right? When I ran a team of 9, we had an Excel spreadsheet with the 3 key drivers of every single name. Whether they're narrative or KPI focused. Tell me about the management team, right? What are the 2 key risks to the business model? What's the next 6-month catalyst path, right? Do we need to move fast or do we have time on this idea? What's the bull base bear, right? What's the number one thing? What's the single most impactful variable that'll make or break the story? And how do we track it, right? What's the research plan, right? Based on this bull bear, what are the things we can go do to develop conviction in one of these outcomes, right? I'm not going into this thinking it's a long or short. I'm trying to create a structured system around this, right? And then, what's your sort of, do we have a recommendation? Like, what is your first sort of, and with a Bayesian approach, we'll update that. So I want to do this across, I almost got to this across 300 names, but I want to do this across 157 now, right? I want to have a 2-page report that's an up-to-speed completion brief, right? Because then I could feed this back into tracking systems, right? So a little bit of like working with systems is don't just start with the simplicity, start with the complexity, right? Of the deep, rigorous analysis on Danaher, and then sort of refine that down to the simple thing, right? Because most stocks, like most PMs will tell a story in 30 seconds of like the stock is being made or broken based on this, right? If you can't do that, you probably don't know what you're doing. And so, take that one thing and put that into a system. The one thing for Danaher is Paul and Sativa bioprocessing trends. And so across 157 names, can I have that, right? What will make or break the stock? The really scary thing, and this is where I think quantum mental systems are a little bit scary, or maybe like could work now, is you can actually create automated tracking around this across 57 names, right? These are illustrative, not meant to represent reality, but like I can go in and get all the quantitative data points. I can get data, industry data, alt data, et cetera. all the comments from companies and management teams. If biotechnies in Europe at a BAML healthcare conference saying something about bioprocessing orders rolling over, and I hire a team of journalists in Europe to sort of go to that management meeting and take verbatim notes and feeds it back into the system, and all of a sudden I have a signal that sort of has high correlation to Danaher, and everyone thinks things are getting better, but that allows me to punt the stock because I sort of feed that raw notes directly into my system, and it comes into my dashboard with a flashing red light. That's it's kind of like not conceptual anymore. It's like it's possible. So possible and scary. So how you implement this? I sort of like still am just slowly reading these reports. I've compressed 30 hours into 60 minutes. Again, like if you're in the desk doing this, you can redeploy those 29 hours elsewhere. A little bit of still like hand valuation. Again, like some of these spit out great, some of these spit out like, man, you didn't. Why are you saying that's the number one thing? Like that's dumb. Like so. It requires debugging is like still a thing. Maybe after a little bit of debugging, you can create what I like to do is like find 10 that didn't work well, explain why they didn't work well, feed that back into the skill. Like, hey, you're making these recurring mistakes over and over. Make sure your key driver, the number one thing is at least like 40% of profit or has a potential to be 40% of profit. Like, don't tell me that, this 5% of the business is the most important thing like that. You refine your consideration of what matters. So iteration matters here. Create those tracking systems and then the validation system around this, right? So you should be able to, and I think like for those building in, this should just be a loop. Like this could be output, run into a validation system. Citation is sort of important. That's where like AlphaSense has done a good job on citation. So can all of these numbers, have some sort of citation back to K, where sort of click through citation, I think will matter. So again, not perfect, but I think the pieces are there. The pieces are there. So for all 157 names, like, I have a report of, what's the primary bet, the three key drivers, two key risk factors, bull-based bear, thematic leverage, data dashboards, primary research, like what humans can do. I think this is going to be pretty interesting. I'll share these as we go along. I'll share some in these open webinars. I'll share more and with our students. I'll probably go a little bit slowly just because my token bill is getting pretty high on high on these. And I sort of point out like this doesn't drive alpha, right? But it's a start, right? It drives alpha in the sense that if I'm doing this on the desk, 60 hours times 150 names consumes my life, right? If I can augment this down to 20 hours, how can I think back on all the new stuff that I have time to do, right? I've lived this intimately, having lived in two worlds. I lived in the Tiger Cub world, and I lived in the multi-manager world. The sort of idea velocity demands of the multi-manager world didn't allow my analyst team to spend a lot of time at trade shows, on the road, doing primary research, where we decidedly did in the Tiger Cub world. And so I think this requires a little bit of rethink on how analysts are spending their times. I think the obvious output is, pushing alpha, sort of the chase of alpha more into scuttlebutt primary research as desktop research becomes more commoditized. And this is where I think it's also hard for quantum mental firms to play unless they have research or teams of journalists to go out and capture this context. Listen, you still have to form an opinion. You still have to navigate N of one situations, tariffs and Iran and regulatory volatility, and we're still assigning probabilities around very tough, unknowable questions like will AI kill SaaS stocks, and will the third party payer system in healthcare break down? What will AI's impact on healthcare companies? Like these are things that are knowable. Like I can't go into ChatGPT and say, hey, will there be a breakdown of the third party payer system and will we have Medicare for all? These are sort of unknowable questions. We play the game of three dimensionality of what does the market believe, where's the hurdle, and then when things get extreme, you sort of jump over that hurdle. The expectations engines are, I think, an interesting path as well too. How will AI impact drug discovery? These are unknowable questions. You're not going to get that answer. But I think I go back to informational edge. It's not alpha modern alpha is not about informational edge to me. It's about an integrated perception and differentiated view of the future and a three-dimensionality of what the market believes and what I believe, and sort of playing in the extremes of the tails where there's the sort of more severe expectation gaps. So we still have to make our 60-40 bets, our 2-to-1 risk rewards, which are three-dimensional in nature, what I believe, what the market believes. The good news is that we sort of spend less time spreading consensus and updating models and the sort of low calorie work, and more time in the sort of really interesting high calorie work. In my opinion, now, every firm is going to have different views on this. Just like some firms demand their investors, their analysts build models from scratch as a learning exercise, and others use Canalys models. So again, heterogeneity of investment process. But there's all sorts of rethinks of investment process that which is fun for me, because like I love thinking about investment process, just like really fun. Again, I probably have a problem. So the skills architecture, it sort of fits in a couple buckets. It could be these standalone skills, like one skill, one trigger. What's really interesting to me are these orchestrated pipelines, because then this requires a little bit of, I think, intelligence, context improvement. But I think this is the future, where you'll have just an orchestrated pipeline of running multiple skills, which have multiple effectively prompts in those. So that's where I'm really thinking about, and we're sort of building our own skills toolkit, thinking about the sort of 10 phases of investment process, and thinking through different sort of skills and skills workflows. And these will all sort of like be behind the scenes, I think, ultimately that feedback into an agentic work platform. So that's my view of like where this is all going. Please push back, disagree with me if you disagree. Some of this is like, we can kind of build this. It's kind of fun. Like, I'm enjoying working with people because it's just wide open territory. The measure is, how do we build something that's user friendly for investors, that drives comprehension, not AI slop? How do we build validation systems around that? And then ultimately, it's like, how does that help you outperform, right? Like, if none of this helps you beat the market by a wider margin, then it's completely wasted motion. It's just AI, sort of AI psychosis, right? I think ultimately, like, the PM job will be change a lot from this as well too. As a PM, this would be insanely nice to be able to have a research plan where I can go into all 300 stocks and have something like this. A lot of this is like one by one. It's interesting, but the idea that this can scale is transformational, right? So across a 40 stock portfolio, if I can hit the research plan button, and for every idea, I have a catalyst path and research activities. So I can see, oh, in 3 weeks, the China VBP report's coming out. Here are 3 checks you can do on the China VBP to get smart ahead of that catalyst. Hey, analysts, come into my office. This catalyst is coming up. We have this portfolio exposure to China VBP. Do we want that? Let's go do some checks. Oh, it sounds like it's going to be more, draconian than the market expects. Let's flip that positioning. Let's be short into this, right? These are sort of considerations that impact your portfolio often today without really sort of intent. Like, there's a cognitive limit of how many of these things we can pay attention to, right? Especially when you're covering 300 stocks, right? This is a constant game of triage. And as a PM, like, I don't have the 4,700 hours to ramp on everything, but I could do the 10-hour ramp on everything, and I can know my names that my analysts are pitching me much more effectively. This helps for teams. Like, if an analyst is pitching a name, you have a 10-person investment team. The other 9 people should run some sort of AI approach to come in more prepared for that meeting, in my opinion, right? And so you have these signals, topical briefs or data trackers, and we see, hey, there's a signal that AI bioprocessing is hypothetical. AI bioprocessing is slowing down. We have this biotechnique comment from the Europe BAML conference, and we see this data set showing, stacked growth decel. We're investing on that based on an acceleration. Is there a sort of a violation, a narrative violation here? Being able to sell the position quickly ahead of the rest of the world figuring that out, that's the game. That's how alpha is generated. So these automated research drivers, where you can sort of take a stock, look at the key drivers, and do automated research around it. Again, with the sort of it depends. The way a long only will do that is different than the way a multi-manager world would do that. What's interesting to me is, like, you can blend some of these concepts now. What do I mean by that? If I'm in a long only now, I don't want to get away from what makes me great, focusing on 3 to 5 year hold periods, business quality management, moat, patience and conviction, and mispriced. But what I could do is I could take the way multis think about shorts. I could take the way Tiger Cubs think about shorts, right? Which is different, similar but different in certain ways. And I could create agents, right? Right, across these two investment styles, across a 30 stock portfolio. And every week I could have, the Tiger style short report on every 30 of my names, the multi-manager short report on every 30 of my names, right? At some point, they might pull up something interesting, right? It's like, oh wow, like the bioprocessing is decelerating, and that means they're going to miss the quarter. It means their revenue's going to get cut. And this is Q3. They already had hockey stick guide update, which is like the multi-manager spivvy sort of thing. I didn't realize that they're going to guide next year, provide headwinds, tailwinds on this Q3 print. We've already made money in the stock. Maybe this is a good time to sell the stock, right? And so these can provide signals, whereas when you're doing your job in a manual way, you're not going to go do as a long only. You're not going to go do, spend 30, 40% of your time on the earnings season motion, right? But you can turn that 30% of time into 3% with an automated motion. I think the way investors operate will converge a little bit more with agents. We've already seen that a little bit. The way Tiger Cubs and multis operated in 2008 was very, very different. It's much closer. They sort of speak the language in 2026 much more closely. So it's just a continuation of a trend. The last thing I'll point out, and then I'll take some Q&A. And again, sorry for being so wordy here. There's a lot of exciting things to show. Is that this is an adoption phase. I think what the other thing I see a lot of people doing is, hey, I do it this way. Let me try to do an AI approach, and let me like speed run to a future state. And they're not getting good outputs, right? And I don't think that's the right way to adopt this process. My sort of experience having done this and sort of getting to these outputs is that it's important to have a parallel phase, whether it's the first dozen projects, you actually sort of do it both ways, right? That gives you an ability to test comprehension, to test and train your skills. Hey, I did it this way. I have this view. Oh, you said, the AI system, you have the full context to then evaluate and debug the AI system. You can feed that back into your skills, and you're not going to get every single one, but you can fix a lot of the errors in your skill structure. The nice part is that the AI system is more efficient, so you're not going from 60 to 120 hours, you're going from 60 to 80, right? After you've had a few of those, you can recalibrate back in, and you can start to accelerate. This is for my hypothesis, that you can get back down to, at some point, what used to take me 60 hours, I can do in 30 hours in a much more rigorous and signal-rich way, right? I don't know if people are like there yet, but that feels to me like something that's now possible in 2026. So you want to spot check, parallel before you replace, and sort of build the trust. Some of this is just like building the trust and building the intuition of the jagged edges. So I'm sort of like I'm excited about all of this, partly because I just see the things I just showed you that I think are so much different than the chatbot interface, which was kind of like if you moved a bunch of paper and did a lot of prompting, you could sort of like see high quality things, but it didn't scale. These things now to me feel like they can scale. So if we can help, please reach out. Brett at Fundament Edge, not Fundamental Edge. We're thinking about, is our workflow context helpful IP as a starting point? I've sort of 15 years of putting this whole thing together, sort of the workflow. Training our core businesses training. I've been a teacher of investment process for a number of years now. I'm going back into covering stocks in this AI way because I sort of like see where the gaps are. And I think there's a number of quantamental priors I'm drawing upon of like why things didn't work in quantamental strategies. And even thinking about sort of building some orchestrated skills pipelines. And we're sort of rolling this into a few things. We're going to do a podcast. I think there's now a lot of interesting people to bring onto a podcast to talk about this in the public arena, in sort of a hopefully a high trust way. Our AI accelerator, which will be a lot of the flavor of this, but we'll sort of pick a workflow a month and go deep into actually helping the cohort build these. And then sort of the full stack of enterprise partnerships. In the past, we've done some 3 hour, 6 hour seminars, get up to speed. I don't find those that intellectually satisfying, and I don't think they drive a lot of process change. So I think we're pivoting that a little bit more to a select group of like partnerships, like how at Fundamental Edge we can be a fractional part of your team. And I don't think we have unlimited capacity for that. So we're thinking a little bit about doing some of that as well too. And like always, we'll try and share. We don't want everything behind a paywall, with the caveat like we're running a business as well too. So we'll try and bring some of this. I try to sort of do the iteration in my own mind on Twitter. I have an idea, I tweet it out. We'll see if people agree with that or disagree with that. I get a lot of like my ideas are sort of, I've always done that. My ideas develop a lot in that arena of Twitter. And then I go back and build them into, it's a cool way to create stuff. So this is available on YouTube that we did a couple weeks ago, up to speed with Cloud Cowork. I'm going to show you some of the modeling with Excel in April 30th. And then we'll sort of wrap up this webinar series of kind of the new investor dashboard. What is the new investor dashboard? How do you think about evaluating your process and starting to think about your investment dashboard? That could be in a Perplexity computer, that could be in an internal build, that could be in all sorts of Cloud Cowork if you can deal with the pressing the button to approve everything. And so this will be sort of I'm sort of like warming up my own ideas too for some of this stuff, candidly. So we're continue to sort of refine and build that out, and doing a little bit of still like the foundational seminar, customize it to your investment process. But we're doing a little bit more of this, like build something first, then go in and sort of deploy it and teach it. I think the workflow labs is where ultimately we'll spend a lot of our time of, hey, let's take a concept like financial modeling, and we'll bring our context architecture and help you transform the way you're building financial models. So I just spoke for almost 2 hours straight. So I'm going to stop my share, and I will take I'll take some questions. I don't know if I will get to all of them. We had incredible amount of interest. I almost had to up my Zoom capacity for this. But happy to take any questions. You can maybe just put them in the chat. Thanks to Ken. I'm enjoying the crazy Brett AI train, probably because it makes me feel like I'm not the only one. So thanks for that. All right, let's see. How do we do this? Hello, Andrew. Are you there?
Hello.
Would you mind just firing off some questions, and I'll
Sure, going through these now. Okay. Starting off, there's one question which goes, I guess at a high level, as a long-short analyst taking on new coverage while deep diving on industry-specific technology, what is the best way to build out these AI simultaneously or leverage tools to do so in your process? Can you leverage other tools or just spend a weekend trying to paint the mosaic quicker once you're established in a process?
Yeah, I mean, I sympathize with all of you. Um, Trying to build and ramp on a new space while also learning AI tools, because I feel like I am constantly behind not investing and trying to keep up on these tools. So I think that's what we're thinking about. Like that's why we're building the accelerator too, is to sort of like what are the three, like in 3 hours a month, how could we help you get smart on tools and really distill things down? Um, I'd say it's hard. I think the answer would be we try to just show you a workflow of how to get up to speed. Again, I would say like the opposite, the sort of the obvious point is it's not either or. If you're trying to get up to speed on a space, you could run the AI augmented up to speed and then you could do the full workflow on your own, right? It could just sort of steer you towards what to pay attention to.
Here's kind of an easy one. Hi, Brett. You mentioned on the last call that you were working on AI curriculum for the Analyst Academy. Do you have a better idea now of which monthly cohort would start having access to that?
Yeah, so in this session. The April 7th session was just launched. Um, and what we're going to do, we're sort of revamping elements. There's sort of I think, a interesting debate on how much junior analysts should learn AI. We've sort of been in the camp of build the skeleton really rigorously before you accelerate. Um, but I think there are some areas where we're revisiting that, not to sort of touch the skeleton of the investment process, but to implement more AI. So we're doing that in this cohort, and I think we'll continue to do that. At least having, we're building a modeling course, and it's 8 hours of sort of deep manual explanation of building a model from scratch. Partly because that articulation becomes a really good skills architecture to then accelerate that with AI. So the program will be, here's 8 hours on how to build a model from scratch, everything we know about building a model from scratch. Here's a skills architecture and a way to use that to then go build and update your own models, right? And so like the manual and the accelerated. That's our mindset. So that'll probably be out in June or something. So that's versus if you use one shot directly into, hey, Claude, build me a model, you're not going to get something that has the benefit of that workflow context.
Got it. This is one that you'll be able to sympathize with. The question goes, thanks, Brett. How long should we wait for the winning abstraction? It seems like there's a risk of getting left behind if we don't stay on the leading edge, even if stuck in IDE wasted motion.
I would push. I don't want to be like I don't ever like to flame people. I would push back on virtually everyone I've talked to who claims they're spending hours and hours in OpenClaw and Claude Code. I'd be like, great. Tell me how that's improving your investment process. And they show me things that are like not that helpful, to be honest. So I would say like the risk now is not really being left behind. Um, I think the bigger and more acute risk has been spending hundreds of hours on things that decay fast and don't drive investment results. So I think if you feel like you're behind a little bit, it's great news because I think a lot of the workflow is obsoleted. Um, Now, that being said, like having the like learn how to build prompts, and building prompts becomes an intellectual foundation for skills. So it's not like everything is lost. It's not everything is lost. But if you're just getting fresh on this stuff for the first time, I don't think there's a concept of it's not like, oh, you missed the bus. I think that's like AI doomerism. Um, Doomerism. I, I don't know if you have any evidence of, large funds driving incredible improving performance based on AI. I don't. I don't think it's happening right now. Where I think it's possibly happening is in small generalist firms that are really changing their investment process, who are going rapidly. So if you're a single person 30 million AUM PM analyst and you're not using AI, I'd be like, go do like you need to be doing that, because I think that's where it can really leverage what you're doing. If you're an analyst at a multi covering 50 stocks and you haven't done anything with AI, it's like probably better that you don't have the scar tissue of all the wasted motion that hasn't really driven much in terms of investment process. However, I think that's changing now. So start to pay attention. Um, you know, um, pay attention to the Andre Karpathy videos. Like go listen to every YouTube Andre Karpathy has, on YouTube.
All right, we've got another kind of a comment in the chat. Your workflow and research context can also apply to the incumbent SaaS debate, know-how and participation in the client workflows and gold standard authoritative data mode. It's true. Here's a question. This is kind of a logistical one. Um, We didn't see very much this evening from Gemini or Notebook LM. There was a question asking about why there was no mention.
I've never thought Gemini was, I never got the Gemini hype. Um, I never once was able to see Gemini give me a better output than OpenAI or Claude. I don't know about you. Maybe it's a skill issue. I've used Notebook LM. I did use because it was early to have the biggest context window for things where I had a lot of context to distill it down. I used it. I think a lot of that gets solved now with MCPs. You don't have to upload Ks and Qs anymore. So um, I still have I like yeah, I don't I mean to me it's not to me it was always like not nearly as good as the others, but that's my personal.
We have a question which goes, retrieval is key for many reasons. Is this better in Perplexity Computer versus Claude? And if so, why?
So Claude, one of the early issues with Claude XL is that retrieval breaks a lot. And when retrieval breaks a lot, what Claude does is it goes to the open web to pull the number. It's like bad Claude, do not do that, right? I do not want Amazon's, 2025 revenues pulled from a blog, right? That is like I don't know where these bloggers are getting their numbers, but they're just like never right. It's like amazing. So that is still, as of like a week and a half ago, still inconsistent. I talked to Claude about that, and they're sort of figuring that out. Um, if you're doing anything quantitative, like figure out an MCP, it's not that hard to connect MCPs into these. And there are some low cost. FactSet wanted 10K. I'm a subscriber to FactSet, and they want another 10K to plug in their MCP. So I am not doing that, but there are some great MCPs out there where you don't have to upload the K's and Q's anymore. You can get Perplexity Computer, like to just sort of refine there. I'm not saying like this thing is like game ready today. I'm saying it's the closest thing I've seen to what I think the future looks like. There are still some retrieval issues. Now, Perplexity has gone early in finance, so they have their own data MCP, and it's been pretty good and not perfect. So it still has plenty of errors. I think to get it institutional grade will require connectors, MCPs, and sort of the data moat internally.
There's a related question which goes, do you feed your Claude all the company docs, 10Q, 10K, etc. when asking it questions? Have you automated this or can Claude access these on its own? Well, it's kind of like Brett was saying, if you don't wrangle Claude, there is going to be that issue of just searching out on the open web and you won't know where it came from.
Yeah, I
Uh,
think the core pedagogical approach of the AI Academy in September 25 was like, go find all the documents, upload the documents, create a prompt, and then after you did that, you get some pretty interesting outputs. And it's like, okay, well, I cover 150 stocks and there's 306 prompts. How do you scale that? And that was like people asked, I'm like, good question. I don't know. Um, so it was a little bit of like showing what's possible, showing that the intelligence was there. And I think we got some really interesting outputs. Um, one, intelligence is improved. Two, the engineering is like, okay, you could scale this, right? Like I feel like you can, with a small engineering team, you could build a dashboard for your and sort of powered by the skills architecture and research context that and it just works. Like you don't have to do the tickerization and OCR and vector database retrieval, all those sort of engineering things. Um, and some of this is like I'm just staring at the line too. So I'm like, well, if the line of improvement is like this, like, okay, if Mythos is what everyone like all these like weirdos that say it's too good to release, like says it is, like, oh, we can't release this thing because it's like too good. Like, oh, sure, Dario. Like, Um, but if Mythos is as good as people say, if Dario, if you're listening, what's up? If Mythos is as good as people say it is, then intelligence improves. The MCPs get better. More things get sort of abstracted. Um, you still need to sort of like tell it what to do and how to do it, but you sort of like it more and more feels like everyone will be like, oh, 2026 is the cursor moment for finance. I'm like, get out of here. And I'm like, okay, like, yeah, I could start to see it. Um, Now again, it's like that's a different thing because deterministic code is very different than non-deterministic probability assessments on public equities, where it's like an adaptive ecosystem.
Got kind of two administrative ones. One question goes, in the AI Academy, do we leave with some sort of library of skills or a skeleton of a process to enrich?
Yeah, so we'll likely do that. We're figuring that out right now. A question from Routing too. Can I sign up for AI Academy 2.0 without the content of AI Academy 1.0? Yeah, I think what we're likely to do is anyone who signed up for the AI Academy in 2026 will sort of roll them in with zero cost, and then the last years we'll do some sort of discount, um, and then we'll have some sort of like the idea. Some of these webinars is like this is what you can do now, right? This is possible. The AI accelerator is like, okay, this month we're going to build, an idea generation engine. Here's our idea generation skill. Here's the orchestrated pipeline. Here's a interview questions to ask yourself. Um, and at the end of the month, how do you have a working idea generation engine calibrating from our context architecture to do that? And rather than one shot everything that will decay, maybe there'll be something after skills in 6 months. Who knows, right? We'll just do it month by month to basically help you stay up to speed and implement. So give us a few more give us a few more um, weeks on that, and we'll have some more specifics. I was figuring it out to be honest right now. Like, how do you teach AI when things are changing at such a rapid pace? Is like a really hard thing. I took an MIT AI course one time, and I signed up and paid, and then I looked, and it was like the content was from 2021 or something. I'm like, what the hell? So you want to be really careful. So um, so yeah, that's that.
There's a question which goes, it's kind of about the jagged edge and a little bit of the bugginess in using AI. But the question goes, wondering to what degree these up-to-speed use cases through Perplexity Computer you showed us is replicable if Cowork is still buggy. How about Cloud Project or Perplexity Pro?
Yeah, you can take a skills files are just like just like text files in a zip file, right? And so you can take a skill file, they're very easily transferable. You can share them in a group platform, right? I think like these dashboards will have like shared skills. So if you have an investment firm of 500, right? I think it's like possible today, like turn you on with a dashboard and have a shared skills, but then an ability to customize those to your specific use case. Your biotech analyst is going to have a different skills architecture than your banks analyst, obviously. There's going to be different sort of workflows, um, different workflows, and these are portable between Claude and Perplexity and whatever OpenAI comes out with. So they're like very easily portable. What I noted is like Claude and some of this like ChatGPT early iterations couldn't write prompts well. It didn't have the capability. So you had to write them by hand. Now you waited a couple model iterations. There was enough education on prompting in the training corpus, and sort of, people suspected that the models were actually trained on the right prompts. And then all of a sudden, like in a prompt writing competition, any of the LLMs is going to blow you or me away. So we're kind of at that stage with skills now. It's buggy, but I'm guessing, it will improve.
We got one from the webinar chat. The question goes, so to dumb it down, it seems like the key here is building out skills that are used for repeatable tasks, and then you can call on those skills to accomplish what you want. Um, that's the first part of the question.
Uh, yeah, I think the area to focus now is like if you were to write a book on your investment process, right? It's like go write a book on your investment process. What you do, why, where you've been most successful, where you've failed. If you look at an idea, what are the 32 steps you walk through on the idea? Like turn the knowledge in your head into like put it on paper. Um, that to me has been the highest leverage in sort of this abstracted world. So second part is I should spend my time building skills. I would say no. I would say use your time articulating what you do and why. Have an agent build the skills and then just use them and then debug them. The debugging process is a big and important process here. Um, so the actual like AI part of like what you do is like not that it's not that cumbersome.
Kind of a related thing. There's a question from the Q&A bar, which is kind of what advice would you have for creating our own skill files?
I think that to me it's like the meta skills workflow is get very, spend a lot of time, ambiguity is the enemy of output and working with AI. That's been the case from the beginning. And so a lot of the workflow is disambiguation, right? How do you just get very, very specific? And that context of how you operate is going to be sort of create, the curve of the exoskeleton that you wrap around your process. So question on the, Karpathy has talked about a second brain with Obsidian and Claude, and you have all of your context in Obsidian, and it sort of feeds into your. It's a similar concept. I don't. Again, like all these like fancy, oh, you got to use Obsidian and all these things. Like it doesn't, it's not that deep, guys. It's like you can do it in a Word document. Like you don't have to be like, it may sound cool, like, oh, I have a second brain with Obsidian that's like connected via MCP to Claude, my Claude. It's not that. Okay, cool. If you want to sound cool, do that. If you want to buy Apple Minis and run OpenClaw um, for AI productivity theater, like knock yourself out. That's not what I'm trying. I'm not trying to hack things to like sound cool. I'm trying to get good outputs without spending hundreds of hours doing those things. So, um, and if that doesn't work, maybe I'll have to go learn those things. But like what happens now is like my context documents are like in a Word file, and then I upload the Word file into Perplexity Computer, and it creates a context architecture that I think is good. And so um, that's I don't think you don't need to like, we're getting a lot of noise of here of like, oh, if you don't have a second brain with Obsidian, you're going to be part of the permanent underclass. I'm like, just come like there's so much of that out there right now. Um, and that I just don't think is productive. It makes us feel like everyone's behind, and I don't think that's the case.
It gives people a sense of do something-itis, and they just think if they do something, then they'll be okay. So that, there isn't the clarity of process where, if the technology catches up, having a clean articulation of your process is a great jumping off point.
Yeah.
Had a quick one here. Would you be able to share the cheaper MCP you mentioned that could be used at a small shop?
Is it a financial modeling prep has one, I think. Uh, I like the DeLupa one. I think FinChat has one. Um, go check like I like Grok to sort of go ask these questions because there's so much like AI happens on X basically. So if you have a question like this, go into Grok and it will go and pull conversations from X. That's what I would do. To get the specifics. And then one question, can you share your skills files? We're not going to share them now, we're trying to figure this out as part of our business. Listen, we train humans. That's sort of like our core business. We have 6 instructors, 5 on the ops team. Like we train humans how to invest. Um, and so there is a little bit of this for us. It's like, what does our business look like in 3 years, in 5 years? So I don't. My personal opinion right now is like seat counts are going to be impaired because um, yes, it'll make the current investors more effective, but it will be, the game will just get more competitive. Like the frontier will shift to primary research or other considerations. Certainly, like the big firms, I don't think, maybe if you're small, under-resourced, maybe you thought you needed an analyst, but you don't anymore. So I think it'll be incremental. I think it also opens a path towards um, launching a fund, right? Like in the past, from time to time when I get the bug to get back in the game of investing, I'm like, well, damn, I need like 3 analysts and a COO, and I got to burn a couple $1 million to like get to institutional scale. I'm like, well, maybe, well, maybe I can do that with a maybe I need 1 analyst who's, one ops per. So I think you've seen not an explosion, you've seen acceleration in entrepreneurship. So maybe you see some reduction in headcount in existing seats, but maybe you see more people throwing their head. Maybe you see fundamental edge capital at some point in 2028. That's an AI augmented exoskeleton capital in 2028. I did just save that domain. I own exoskeleton.com, exoskeletoncap.com. So maybe that happens at some point. That you see sort of like single manager launch. It's been incredibly difficult to launch a single manager fund, partly because break even's 50 million, 75 million AUM. To do it with a good, like really good institutional grade investment process, if you can do that in an AI augmented way, break evens come down a lot. So maybe you see just more and more, like a resurgence of fundamental investing. And if you can tie it back to 5% alpha, if all those funds can risk manage more effectively and generate more alpha, you could see a resurgence of small 1, 2, 3 single man shops that beat the market by 5 to 10%. In a world where beta is expensive and private markets are expensive and market microstructure as a setup is sort of tips favorably for individual stock picking, concentration indices, et cetera. So I'm like pretty bullish on, you know, it's like asking a barber if you need a haircut. Like, you would expect me to be bullish, but I'm pretty bullish on fundamental investing writ large over the next decade. Matan, can we send our learnings your way and compare notes? Yes, please do. Email me, DM. Love to connect. That's a lot of how I learn all these things is conversation debates. Um, you know, I'm pretty busy right now. So if I don't get back to you right away, please don't take that personally. We're building a bunch of things, revamping a lot of our work. But yeah, I'd love to, even if it's exchanging DMs on Twitter or email, would love to do that. All right, so that's probably a pretty good 2 hours and 16 minutes. My marketing team says to keep YouTubes to 15 minutes or less because people don't have the time and attention for 2 hours, but I can't help myself. So I hope this was helpful. We'll come back in 2 weeks, talk about modeling, and sort of stay in touch. Expect more from us in this area. We are spending pretty much 100% of our time figuring this out right now. And so we'll continue to iterate and explore. Thanks for your time. Thanks for the questions. And yeah, please stay in touch.